Good afternoon, everyone. I'm here with my friend and partner in crime. He is Kenneth Jaramillo. Kenneth, good morning. Good
Good
afternoon.
morning. Good morning. Good afternoon to those of you guys that are watching wherever you're at. My name is Kenneth Jaramillo, loan officer with Academy Mortgage over here in Chandler. We have several different branches across the valley. Uh, we specialize in refinance, purchase, right? Whether it's conventional, FHA, VA, USDA, or even some of the non-QM out of the box loan products.
Okay. First of all, I'd like to get a little update as to what's going on in the mortgage world. 'Cause I know it's been a little rocky road and it's been crazy in the last few days, right? So,
Few days, yeah,
yeah.
yeah.
Just take us back a little bit. When was the rate at 3%? How long ago?
So 3%, I want to say earlier January, probably the first week of January. I
Okay.
remember me and you, we had a closing, which we locked the rate first week of January. We had a closing first week of Feb. It was still in the 3%.
That's
Low,
crazy. And
low, yeah, about low 3% around that time.
so January 3%. So fast forward, when did we move into the 4% or 3%?
So
Actually,
every
we're
6
3% in January, and then we moved to 4%. Sorry.
Yeah, so every 6 weeks, every quite often, right? It's about 6 weeks. The Federal Reserve Board they do a meeting as far as how the economy is going, what are going to be the next plans to combat the inflation, as we all are aware, right? So that had jumped up towards the end of February, early March, and then they had their meeting mid March, which the rates, the market had kind of reacted negatively uh, from that meeting. Therefore, the rates had started to increase.
Got it. So right now, where are we at?
Right now, typical 5% on a conventional, it's going to be in the high fives.
High
Uh,
fives already, huh?
High fives, yeah.
So I heard talked to one of my other lender partners, and he mentioned that we would be about 6% in a couple of weeks. That's so, or
Well, it depends on how the next meeting will go. But, again, according to the last meeting that they had, the Federal Reserve Board, they plan on doing six more rate hikes this year. And
six still, huh?
again, the market and the market reacts, right, whenever we have those meetings, whether good or bad.
Got it. So what would it mean, or what would it look like? I'm going to put you on the spot, man, and I know I didn't prepare you for this, but what would it look like? Let's say for someone that's buying, I think the average right now is about 500,000 here in Maricopa County. The prices are skyrocketing, right? So, what would it
Hmm.
look like for someone? Let's say if they would have purchased a home in early January at 3%, 500,000 versus now at almost 6%. What would the payment difference be? I
For
think
500,000 loan, probably about closer to about 250, $300.
total. So their payment would increase from so if they were to purchase a 500,000 home in January, what would that payment be? Just about ballpark.
Back in January, 500,000, that'll probably put them around just under 3 grand, I want to say. I mean,
Okay,
that's
and
with
that's
that's the with escrows, right?
twenty
But
percent
roughly
down.
it's going to be about 10% or so, 5-10%
Okay,
minimal down payment.
okay, so 10% down. So close to $3,000. What would that payment be for 500,000 now? About
For 500,000 now, it's probably going to be close to $3,300.
3,300. Okay.
Hmm.
So for those of you that are waiting for the market to crash, guys, there's still a lot of people buying out there, and not only people but institutional buyers. They're buying rental properties, so they're beating the little guy with cash. So we have listings, and the last few listings, just one that's going to close next week. They did a 2-week close as an investor, and they're paying cash. So we got a total of 7 offers, and the cash one won. We had one that fell through for the first time with the cash buyer, and then we had another cash buyer because the seller wanted to close quick. So just keep that in mind. There's a lot of people buying, and it's not going to change because the rental property prices are not going down either. So they're pretty consistent, and it's gonna cost you still maybe a little bit cheaper if you rent. However, you have no equity, right? I mean, you're basically at the mercy of the landlord, and if you've been following the rentals, if you're renting, the rental prices continue to rise. And again, the once you buy a house, your payment's fixed for 30 years, right, Kenneth?
Yes, absolutely. So just to piggyback on that, as far as renting, I know renting could be enticing, right, for a lot of folks because you don't have to worry about repairs, maintenance, stuff like that. But one thing to really keep in mind, guys, is the valley, right? We're one of the fastest growing city, right, in the nation. There's more. I'm sure you guys see these updates all the time. There's more and more tech companies moving here, which what's going to happen is more people moving here. There's going to be less houses available, and also those rent are gonna keep on increasing, right? I mean, renting versus buying, renting, you just don't know what your payment's gonna be 6 months, a year from now, or when you renew your contract.
Okay.
Versus if you were to purchase a house, not only you secure your payment for the next 30 years, but you're building equity as time goes by. That 2, 3 years, 4 years you could tap into for when you need the money, right? Or just like what you always say, Juan, to keep building that generational wealth of real estate, basically, right? Tap into the equity, use it as down payment for your next one, right? Maybe rent out the previous one, and then just keep doing that, right?
Exactly. So let's just talk a little bit about. So a lot of people are confused with an FHA loan and a conventional loan. What are the advantages and disadvantages for an FHA loan at this time?
FHA loan still gives you a lower rate, right? FHA loan. There's some misconception out there. A lot of people think it's for first time home buyers or lower credit score, lower income, stuff like that. Yes, they do cater to lower income or lower credit score borrowers, but the main thing is FHA. It's a government backed loan program, right?
More
Which
flexible, right?
requires what's that?
It's a little bit more flexible than the
It's a
conventional.
little bit more flexible, absolutely, which requires smaller down payment, 3.5%. And again, versus conventional, their interest rates on FHA is a little bit lower. When it comes to debt to income, as far as how much monthly payment you can get approved versus your income, right? It's FHA. It's more flexible. If there's blemishes on the credit, again, they're more forgiving. They're more flexible overall.
Very cool. And why would somebody go with Kenneth? I mean, why would I choose you as my loan officer?
Communication, open communication, and just my character. I'm a little bit OCD, to be quite honest with you. Uh, when my initial mortgage consultation with clients, I ask a lot of questions, and I ask for a lot of documentations based on the question, based on how the conversation's going. And the reason behind that is I want to make sure that we address every possible issue before we get to the closing table. Because as we get closer to the closing table, I want it to be as smooth as possible.
And we experienced that with you, and that's why you're here sitting with us, because we like that. We don't want surprises because it affects our clients, right? I mean, and it's their livelihood. And when they don't move the day they were supposed to because you're not closing on time,
Yeah.
that's really, I just went through that, and I got to be honest with you, it was a terrible experience, and I'm sure my lender was not very thrilled to work with us because it was actually a very, very rocky transaction, and the reason that was, it was a different company that he was working with, right? So that
Mhm.
made it so bad, and especially me that I work with them. I'm like, dude, I don't want my clients to go through this, right?
Yeah.
I want
Yeah.
to make sure that we provide them with an excellent experience, and we want to provide you guys with the most uh, qualified, skilled, talented
Hmm.
partner, because at the end of the day, they're a reflection of our work. So I'm glad I went through that myself so that I could see what was going on the other side, and so that we can make changes, right? So
Hmm.
one of the things the reason I ask you what's the difference between going to you, or why would people go to you, is also if people say, well, the bank will give me a better rate. The bank does things backwards, right? They say, okay, they look at your credit, they have a conversation with you about your income and assets, and they say, oh, you're good. They never take the time to go deeper. And from experience with Kenneth, is he goes in, he's going to go deep into the conversation to ask you all those questions that he needs answered in order for him to provide you with the most qualified answer for you to make that decision. And I think that's huge, because if you're out there trying to get a loan, it's not easy. I mean, it's simple, right? You got to provide all these documentations, and if there's questions, we need to get them answered. Yet, if you don't have the right person on the chair, they're not going to give you that service, and you're going to be struggling like I did, and then you're going to have those issues at the end of the road. And again, from experience with bankers, is they give you that answer, they say you're qualified, you go shopping, and then when the deal is about to close, they're like, oh, you know what? Something came up that we didn't anticipate, that they could have asked you at the beginning, like Kenny does, and now you're not going to close. After all the emotional, you probably packed up already, you got everything loaded up, you already transfer your utilities, and you're emotionally attached to the other house, and we're sorry, you're not going to close, right?
Yeah, that's very unfortunate when it happens, and unfortunately, it happens, right, every now and then. But over here at Academy Mortgage, we like to keep improving. We like to be, we spend time to better ourselves, to better our process, to streamline the process. So one thing that we just started doing recently is we do what we call a TBD approval, right? So what I do is I gather all the documents, right, put together all the key information for the underwriter to review the file. And even before we find the property, even before we start submitting offers, what I do is I submit that to the underwriter, right? Make sure everything is in line with the borrower's credit, the income, that there's not going to be an issue. And if there is an issue, we can address it right then and there, right? So that way, when I issue that pre-qualification letter to you, you're good to go. And it's also a very good selling tool for when we're submitting offers. Because what I usually do is I call the listing agent, right? I explain to them exactly what I did. Hey, that borrower, this file is already underwriter approved. All we need are just a few information, which is the address, the appraisal, and we're good to go, right? Everything's been verified with this borrower. Funds are in line, right? Job, employment, income, and all that stuff. So it's a pretty good feature that we just started doing recently.
I like that, and I think it's better to give them a good expectation. And I know some people are anxious to get their pre-qual and go out shopping, but you want to be prepared and you want to be ready, because it's like you go into war with a gun, but you don't have any bullets in it. Like, you want to be prepared. You want to make sure you're able to shoot if you have to, and we want to be the same way. So I wanted to bring Kenneth because he just became a partner of us recently, and we love working with him. We had an amazing experience. And like he says, do things go wrong sometimes? Of course, even on our end, like there's always going to be things that happen. We try to prepare for everything. We prepare for the worst, and we hope for the best. I mean, we always try to make sure that we have all our ducks in a row and make sure that everything's lining up. And I mean, but sometimes, things do go wrong. So it's part of life, right? So on another note, Kenny, what are you seeing out there? I know you're pretty active. Do you see, because people always ask, where's the market at when it comes to purchases? What are you seeing? Because you're on the east side of the valley. We're on the west side of the valley.
So as far as what I could see with my clients and, the people that I work with, the market is still very competitive, right? Because of the inflation, right? More and more people are investing in real estate. Right, not just regular people like me and you, but private equity companies are now. I mean, they've been doing that. They've been doing it for years, ever since 2008. But lately, they've been heavily involved. They're buying more and more houses.
Right.
So
how does that work? Because I know how it works. You know how it works, but let's tell our people, why would people put their money in real estate when we see that there's inflation? What's the reason behind that?
So inflation, put it in perspective, basically it all comes down to two things, right? Supply and demand, right? Nowadays, there's a lot more demand than supply. That's what's driving all the prices up, right? And, the basic things that we need, gas, not just housing, gas, groceries. So what a lot of people are doing, again, not just regular people like me and you, but the people that handles our 401k and retirement funds, they're investing to real estate, because that's a for sure way of them increasing the funds, the profit, right? I
Definitely.
mean, the real estate, if you look at it, the pricing goes up and down like this, but the overall trajectory is real estate is going up.
Yep.
And
Love it. Yeah. So I was giving this example this morning because they're like, oh, so why would people put their money in real estate if we see that, the rates are going up and this going up? Well, just think about it this way. If you had $100,000 last year in your bank, you could have purchased $100,000 worth of goods, right? This year, if you have the same $100,000, the houses are $70,000 more, right? So if you had your money in a house, you have 170,000 instead of just 100,000. If you just have them in the bank, so you can buy $70,000 less. And then the other thing is, what about cars? Like it used to be in the car industry, right, Kenny?
I
And your
spent some
family
time in the
said,
auto finance. Yes.
right? So the cars are more expensive too, right? So what happens is your money is able to purchase less, and what people do that have money, and if you don't have money, if you have a little bit of money, you can invest in real estate with a little bit, right? It's the beauty of it. You can put your money in there, and you by not even doing anything, because of appreciation, your money is growing in the form of equity. So that's why people like to go into real estate, because it's an asset just like anything else, and it's going to go up in value because first of all, there's a lot of demand, not a lot of supply, and the cost of goods are going up. So do I see them coming down? No. But again, I don't have a crystal ball. This
Yeah.
rates might slow them down, yet it's not going to stop because people still need a place to live. Like Kenny was saying, there's a lot of companies, technology companies, that pay quite a bit of money to their employees are moving here, and they're moving from California, from Washington, Oregon, places where people already make a lot of money. And not only that, they're bringing their cash that they just sold their home for over there for $1 million. That same house here is 700,000, 600,000. So they even have a surplus of money, even paying the house off. So that's why I feel like it's not going to change, and it's going to be like this for a little bit. Now, if you're considering selling, I mean, we'd love the opportunity to work with you as well. The market is great. I think that's a great time to sell. So if you're thinking about investing, we have many ways to do it, right? Kenny, have you worked with?
Absolutely. Yes. I actually have quite a few with your agents. So when it comes to investment, I mean, we have programs right now to where it requires as little as 10% down, which normally it's at least 15% or more, right? But this one is just 10% down, and there's no mortgage insurance. The good thing is, you can use about 75% of the future rental income towards qualifying. So it's a pretty good program. It's one way. This program is actually designed for junior investors, right? If you're hoping to get started in investing, this is a perfect program for you.
So what do you mean by 70% of rent or future rental income?
So let's put it that way. Let's say, let me pull my calculator.
Go for it.
I'm a finance guy, but I can't do everything off the top of my head.
Come on, your dad would be like, "Really, Kenny? Come on, you can do that in your head." No, just kidding.
So let's say your mortgage payment on this property that you're eyeing. Let's just say, for the sake of calculation, let's just say $2,000, right? And your future rental income is $2,500. So what we're gonna do, we're gonna take 75% of $2,500, right? So that right there is $1,875. Remember, your mortgage payment is $2,000. So $1,875, basically the house is going to pay for itself, worth $1,875. So with your own income and credit, you only need to qualify for the difference, which is $125.
Wow.
Almost everybody can qualify for $125 worth of payment, right?
Well, if you're wondering can I be an investor, or who can be an investor?
Anybody. Pretty much anybody, as long as your credit score is over 660, we can get started. We can get you started investing in real estate. And just think about the equity, not just the cash, not just the monthly cash flow. With this example, right? I mean, your cash flow is probably about $400, $500 a month, which is pretty good, right? But think about the equity that you can build up 2 years, even a year from now, right? And having someone pay for your mortgage, basically.
That's crazy. I got to share a couple of stories. So I started investing a few years ago, maybe about 4 years ago, And my first home that I bought as a true investment, because I had another one before, we bought it for $135,000.
Wow.
That house today, from 3.5 years ago, is worth about $350,000. Right? What have I done besides having somebody else pay that mortgage? And when the rental started, it was I was charging $1,200 a month, $1,400, and I just rented it back. And it's the same tenant, so I told him, I'm going to be nice to you. I'm going to rent it for $1,650, which the true rent price for that house is $1,800, and my mortgage is $700. So,
oh wow.
What I'm saying is, and people say, well, you were lucky, you bought back then, you knew about it. No, I was just, and it's dollar cost average, which is just like when you buy stocks, right? You buy them at different points in different times. So yes, we bought it at a great price, but then I bought another one for 180, and then I bought another one for 240, and another one for 260, and that one for 260 is worth $500,000. And I got very creative with the financing, and we can share those stories with you guys, and we can share with you how you can do that as well. And with a partner like Kenny, we can put stuff together so that you guys can get into an investment situation and not even have to come up with a lot of money, because you are able, if you own a home, you're able to buy another one as a rental and or as a primary residence, make your home a rental, and start little by little with that, right? And fast forward, we own several homes, but the point is, you can get there with the right knowledge. A lot of people think, well, you have to have a lot of money to make money. You don't. You have to have the right knowledge, the right people on your side. And if you do, you'll be able to succeed and become very wealthy. I mean, you can do that. And again, we have the resources, and we would love to share them with you. Just give us an opportunity. You can reach out to me. You can reach out to Kenny. You can comment here, and we can reach out to you and connect, because we truly want to help people become wealthy. And by us sitting down with you, we will have an opportunity to share with you what we have done, what other investors have done, and we can help you get to reach your goals.
Absolutely. Absolutely. But I mean, the first thing is to reach out, right? And it could be just a simple conversation. Just ask questions. I'm always available, right? If I don't answer, shoot me a text. I'll make sure to respond to you. But the first thing is to reach out. So
exactly.
If any of you guys are interested, yeah.
What's that, Kenny?
I said, if any of you guys are interested, just call me, shoot me a text, or Juan, call him, shoot him a text. We're always available.
Yeah, I mean, again, guys, nothing happens. I know it's simple and it sounds stupid. I repeat it quite often, but nothing happens if nothing happens. So take advantage of the resources, guys. There's no obligation. When you guys want us to talk to you, we're here to help. We honestly love what we do for that reason, because we're able to make impacts and big impacts in families and individuals and businesses, so that you guys can live the life you want, however you want, and enjoy whatever you make, with whoever you want. So please reach out to us, and we want to thank you for first of all, Kenny, thank you for coming to our video conference, and we appreciate you. And if you guys are watching, thank you so much for your time, and share the love, share this video, and we look forward to seeing you again next week.
Thank you, Juan.
Thank you.